Hello and welcome to this week's sentiment analysis for the week of July 5th. Last week was an incredible week in many ways. If you were on the short side of the fence, it was incredibly profitable. If you were on the long side of the fence, it offered its own opportunities and something that we see within the chart right now. The beginning of the month starting in the green. But before I get too far ahead of myself with this particular chart, I want to discuss my real trading. So let's get to my VPS and talk about some details. We are in my VPS now, and I have the last week's selling points and the duration by which I held on to them. This is important because we clearly see some interesting transitions. So let's get into what we're talking about. If we look at the two big sell points of the week before, 386 days and 389 days of actually holding my trades. I held those trades for over a year. That's an important functionality within my trading approach. For a year, I have been collecting swap fees on these two trades. Even when we look up above at the 79-day or the 94-day, those swap fees, though only pennies, were a staple in my collection strategy. So right now, my inventory has lost quite a few long-term positions being sold off in a profit. That's good though, but it's bad in that I don't have that inventory making interest. But it's still good. So if we look at the recent week, we can see for the most part that the market was in a reasonable short-term range or a stable range. We can see that I had one position that took 5 days to sold off, but most of everything was within a 24-hour period. So that shows that even though we had a direct downtrend in the market for the previous weeks, last week's most trend was reasonably flat or stable. That's a good indication of what we are expecting coming. That is, we could end up going downward again, or we could end up trending upward. And I think that answer is going to be in the order book when we get that far. But let's take a look at the real metrics of this account. Something that needs to really be brought to attention to understand the why. Okay, looking at the top of the screen, I have June of 2026 profits, $6.61. That's on par with April and slightly above May. But overall, if we look at the part of the year, it is above, for the most part, quite a few months. That's an important distinction in that it shows volatility, but at the same time, it shows a recent trend of a stability within the market. That is, the market is highly active compared to what it was, say, in November or December of 2025. Now, what is driving that volatility, or even the incredible volatility of January of 2026 or March of 2026, those were all questionable. And you could cite economic tensions, tariffs, or any other function between the United States and Europe, and they would pretty much be on par with the legitimate side effect of what we are seeing within the market compared to previous months or even year-over-year transitions. So we have a consistency to look at and forward to. But the thing that really is a critical point, and I'm going to talk about this specifically. Average net per month. The bottom line, $4.72. When I started this experiment, when I started this bot, I had one simple goal in mind. For the same exact amount of money, could I beat a standard United States savings account? That was it. I wasn't even trying to compare against the S&P 500 or some of the larger hedge funds. I just wanted to beat my savings account. And the irony is, I did. For the same amount of money, which right now my account is $1,770 some odd dollars. I made $6 in profit last month, and my average is $4 a month. The same amount of money in a U.S. savings account right now will bring me one single penny. That's it. One single penny. For the exact same amount of money. That was my entire reason for wanting this process. That's disturbing, really, when you think about it. That I can make more in one single month, or really, more doing this kind of passive trading than I can actually earn in an entire year at my bank for the same exact amount of money. I know that's not much of a bar to really correlate with. $1,700 isn't an investment, in all honesty. It's not realistic. But the fact that I have achieved $4 average trading per month versus 1 penny is, in my opinion, remarkable. It's something I could have never have imagined I would have accomplished. Even with my stop losses, my database blow up, the things that really just wrecked my investing. And yet I still managed to come out ahead. That is disturbing, really. From the standpoint of being able to invest, being able to protect your money, being able to think about building something in the future. The fact that a trusted institution like a bank is only going to give you 1 penny per month for the same exact money that I made $4 is heartbreaking in a lot of ways. But that is the reality of the world we live in. That metric, that goalpost, I've exceeded beyond my wildest expectations. So really, at this point, for this project, for this experiment, for the entire ideology of my floating grid, it is a 1,000% success. Now, of course, that doesn't mean I'm not going to continue improving on it, or doing better, or even trying to test better ways of building a more profitable program. But I have a baseline that as I move forward in my research, I can carry this information into my future tests, into what my expectations are. If I can make $4 a month average with this simple process, can I beat that? Can I do better than that? Can I improve on that with less risks? That is the real hallmark of what we are discussing with this technique, with this program. So let's get back to the charts and discuss what we think next week is going to bring. Now that we have the context of what this account really represents. Okay, here we are back again at the monthly chart of Euro USD. And we see that so far for the month of July, the last candle is green. So we know we have an uptick. But we know that May and June were both down months. But we see some interesting stuff in the order book, and that is really where we want to talk about. Now, the yellow lines are, of course, my upper and lower range. We see on the right-hand side my current inventory that I'm holding. And we see that I've picked up 3 positions for the current month that I sold off previously. Those are important because they're part of the uptrend that we see within the first 3 days of this month. Now, the funny green line, I'm not quite sure what kind of green you want to call this. This is my intermittent range, where I'm looking at right now in terms of a support level that goes back to roughly April or May of 2025. So we've been within this minor range for quite a while. And that, I think, is where we need to focus our attention, particularly when we look at the order book. But before we actually get closer, I want to talk about this part of the order book right here. It shows activity below the lower boundary support that I think we're going to remain at the moment. But it's something we should really discuss. Let's see if I can get that highlighted clearly. The part under the green line. That's actually quite a bit compared to the rest of the order book going downward, where you see some activity on both sides, but nothing to the extent of what we see just right in that small range. And I think that's an indicative indicator that the support level is going to be tested next week or throughout July. I think we could see prices maybe trying to push lower going back to April of 2025, which would be roughly this month right here on the chart that I just marked. So as we proceed, I think we have a clear indication within this narrow little part of the order book that we could have a prospective testing zone, whether it is institutions trying to get into liquidity or just whether or not the euro is strong enough to hold the current range. I think it's going to be an indicator that could make several key decisions in future market prospects. If we break that support range, I think it's going to dynamically shift the market lower overall. If that support range holds, I personally think we're going to remain where we are at and have been for the last year, with a few occasional pushes against the upper boundary. But I really don't see much of a major change if we remain in the current range we have. That is, I don't see it as a consequence of anything significant. Now let's begin zooming in to the order book chart itself by moving some of these candles out of the way. Okay, stopping here, we can clearly see the part I described just under the green line. The pressure that shows maybe there's enough interest to try to drive the price down into this lower area of support. To test the support, we can see it's actually quite filled with a lot of significant orders, both on the sell side and on the buy side. So there's a lot of interest here. Now, how will that work overall with the larger picture of the order book above this green support region? Because if we look within this area of the order book, we can clearly see a lot of activity, but more importantly, I think, which is a good standpoint, a good representation. I think if we look at the buy side, we see this section here that I highlighted, almost next to no liquidity there. no traffic. We see a very clear pattern of intent within the order book that focuses explicitly on this range. I think that is where the pattern is going to remain. I think it's going to be an aggressive pattern that keeps us within this range. And importantly, if we actually really look at this one spot right here, it coincides with the upper level of last month. So it's very possible that the month of June may end up becoming a resistance area for the month of July. The hardest strength in the order book seems to coagulate there. It's a fascinating prospect and something that really shows clear intent within the market itself. The other area that I think is fascinating is the number of buys right here on the chart, just above the green support area. So again, it shows that the market is looking at testing, but it is also looking at staying within the same region and range as what we had and have had. So as we progress forward in July, the order book clearly shows that we're not really progressing that far above where we are. And even if you take it one step further and you look at the sell side, we see something interesting here too. Here is, we use our capping of the green support area, and we see that we have a significant sell part just above where we're at before liquidity within the sell side begins to drop. So it clearly indicates that the buy side, ironically, is slightly higher in interest than the sell side for the upper price range. The sell side is looking at a very limited structure in terms of where the sellers or short position holders want the market to remain. That's going to be interesting as the market continues to unfold, at least over the next week. Are the sellers going to actually breach this point and fill in this radius? That's going to be really the intent, versus the buyers who have explicitly a very narrow range they want to remain in, with the emphasis really being a strong cutoff of last month. That is a fascinating part right there. Literally cutting off right at the high of June. So this is likely going to be another engulfing candle that could indicate an upward push either mid, late July, or even early August. We'll see though. But we have a clear intent within the order book. There is no doubt about that. So let me know what you think. Share your thoughts within the comments. How do you think this looks to you, to your trading? More importantly, how is it going to impact the asset you are trading? EURUSD is considered to be the most liquid and highest traded asset on the planet. So I personally believe that by studying it, we have a barometer for at least 70% of the market. And I think that is a critical and important step in dealing with any asset, whether it's Forex or crypto. Understanding how these two interplay is very, very important. Share your thoughts, leave a comment, let me know what you think. If you're not subscribed to my content, please consider subscribing. It does help me continue doing this kind of research and developing these kind of tools. Links will be in the description. Please like, share, and comment. Thank you for watching.